Why sanctions don't work, and Putin knows it. Next on the Energy Newsbeat Daily Standup.
California continues to devastate its economy in a net zero dream world. California's passion to achieve a net zero emissions at the expense of its citizens has devastated its economy. Michael, this is an absolutely brilliant story from Ronald Stein, friend of the show podcast. This is really pretty cool. California's contribution to global emissions as the fourth largest economy in the world is a small percentage, roughly 0.75. To put that in perspective, the big earthquake hit California and the entire state fell into the Pacific Ocean. There'd be less than a 1% reduction in worldwide emissions. But what is this doing to national security? Let's go through the numbers. Jet fuel, with all of its 145 airports, including 9 international airports and 41 military airports, the demand is 13 million gallons of aviation fuel per day. Gasoline, for its 30 million vehicles, California is the second largest consumer of gasoline. Guess where they're getting it, Michael? OPEC.
OPEC.
Diesel is the second largest transportation fuel used in California, consuming 10 million gallons. Arizona and Nevada also get 45% of Arizona's gasoline and diesel and 88% of Nevada. These are huge numbers, and Gavin Newsom has flat out devastated the entire thing. It is now a national security risk. This is now number, I think, 16 articles on California in the last 2 weeks.
I mean, to think of the incompetence, the section right under what you just read goes over the fuel taxes. And I want to read this because I think it's very interesting. So on top of gas prices, California adds a 60 cents per gallon excise tax. They have a 27 cent per gallon cap and trade carbon tax. They have a reformulated gasoline mandate, which adds about 10 to 15 cents. A low carbon fuel standard is projected to add 37 cents per gallon and $1.15 by 2046. And finally, if that wasn't enough, the California's summer blend requires an additional 15 cent per gallon price of gasoline during the warmer months. It's pretty unbelievable. I mean, this goes to show you why gasoline is so much. I assume you spent your entire morning listening to Gavin Newsom go on Sean Ryan, correct?
Oh, I saw him about 5 nanoseconds, and he looked like a Wallace and Gromit Muppet when he was doing this with his hands. Michael, our podcast listeners, I'm shaking my hands, and his hands were doing this through the whole Sean Ryan. I'm like, the man's a freak. There's something wrong mentally with that man.
Well, he brought about 45 gallons of his hair gel there because it was slicked back perfect.
Oh, he had to have been also done his back hair, because if, again, he dives in, the Exxon Valdez accident will look like a pond, an accident in a pond, or a ring around the bathtub if he dives in. Yeah. This is really bad.
It is really bad, but let's jump to the next one here.
Let's go to 100% secondary tariffs if no end to the Russia-Ukraine war in 50 days, President Trump. This, to me, is absolutely a signal that President Trump still does not know what's going on with President Putin. The approach aims to maintain U.S. support for Kyiv without straining American taxpayers. He's getting NATO to pay for the weapons, which is, he thinks, a good thing. The concept of secondary tariffs, if he goes in and applies real secondary tariffs on the Indian and the refineries and the Chinese refineries of 100% and LNG of 100% of Qatar and all of these others, it is going to be horrifically and damaging to his presidency. I cannot make that any plainer. This is a bad thing. And I think that the bill that Blumenthal and Lindsey Graham have put forward is 100%. The Kramer effect is in effect. Do the opposite.
Yeah, I mean, I'm getting a kick out of the Kramer. Do the opposite of whatever Kramer says. I mean, I'm going to talk a lot more about this in my section when it comes to what happened with oil price today, because we saw a nice big tank relative to this news. What's funny is he might be listening to the podcast, because this is exactly what you've been saying is sanctions don't work. Now, I think the issue is Trump is using the sanction pushback as an ultimatum to get Putin to do something. What that is, I think, is nebulous and changes all the time. The funny part is, I think Putin knows that sanctions don't work. So he's going to say, well, thanks for the extra 50 days. I don't know what to do with them because I don't really need them.
Right. Here's something funny, Michael. In the article I put in here, Ukraine critical mineral deals is now a problem. Not only were there rumors, Michael, that Zelensky went and then sold all of those to the Bank of London or the UK, and you've got that going out there that's not confirmed, but it's probably true. Russian troops seized control of the Sheveko lithium deposit around June 26th to 27th as part of their ongoing summer. So now the biggest mine and mineral processing for lithium has been confiscated by the Russians. I'm serious. So President Trump is over there going, I got me a mineral deal to try to bolster up our own financial statements and saying, hey, wait a minute, this is going to go on our books? No, it's not, because it's already either been given to the UK or the Russians now have it.
Yeah, I mean, it's unbelievable. This is an interesting double-edged sword. And I don't know if tariffs are even going to work as part of the sanction package, because Russia's not buying anything from the U.S. really anymore.
No. And I firmly believe that President Putin has telegraphed he wants to do business with the United States. And if President Trump wants to do business with him and not have a war, I'm all in. Let's do we do business with China, and China's doing everything they can to take us down. Why don't we do business with Russia and stop the war? Anyway, let's go to the next one here. Town reaches $10.5 million settlement with GE Vernova over Vineyard wind blade failure. And the whales went, yay, we got a little bit of they're over there. A bunch of dead ones are on the beach, and they're kind of going, well, and in memorial, they're going to have a couple, plaques put up. In a significant development for the U.S. offshore wind factor, town of Nantucket has secured $10.5 million settlement on the VE Vernova to address the economic fallout for a turbine blade failure. They're not ecologically good, Michael. When these things fall apart and there's that much microfiber and there's that much problems with these things, they are not green energy.
No, I mean, they're great for the whales, but they're not great for everybody else. And I think the fact that there's this settlement goes to show you exactly the liability that putting these up have to do. I mean, you want to talk about reclamation for an oil and gas well. Think about a reclamation for an offshore wind farm.
And Michael, there is not one wind farm or one solar farm in the global economy that I can find that has land reclamation as part of their package. If you're a podcast listener and you know of one, let me know. If not, you're talking $1 million per each one.
Yeah,
easily.
Absolutely. All right, let's talk about our favorite wind company, Saudi Aramco.
Saudi Aramco. Why Saudi Aramco can't win under President Trump's oil price doctrine? Michael, you always have this thing. Saudi Aramco needs a minimum of $80 to $90 oil just to pay their fair share of the Saudi budget. Here's some in the high stakes world of global energy. Saudi Aramco finds itself trapped in a precarious situation under the oil prices of President Donald Trump. Trump's administration has long advocated for tightly controlled oil price ranges that benefits American interests, but squeezes the profitability of major producers. Let's go into some of this. Aramco's financial squeeze, dividend pressure, and asset sales with Brent crude. They have actually looked at selling some of their natural gas power plant divestiture in a M&A deal, trying to get money for natural gas gas power plants in order to pay for their dividends this year, and that's going to really impact them. They can't handle this low of a price for very long without selling more assets, Michael.
Yeah, I mean, it's pretty unbelievable what they're trying to do in terms of, they're trying to pivot out of oil and gas as a country by pivoting more strongly into Saudi Arabia. I mean, that's funny. In order to get more out of oil and gas, they almost have to dive into oil and gas more and really do a lot of interesting financial stuff. As we know, they are increasing crude oil production, and that may be part of their plan, is to increase oil production enough to the point where it might end up offsetting some of the price differences that they happen. I love this. You said that Western investors have labeled Saudi Aramco toxic due to geopolitical risks. And I don't know if I'd agree with that 100%. I think there are risks investing in Saudi Aramco, but I think they're a lot different necessarily than all of a sudden we're going to be at war with Saudi Aramco. We're not going to be at war with Saudi Aramco anytime soon.
No, Saudi Aramco is going to be part of the new trading bloc, and the new trading bloc is going to be the United States, Saudi Aramco, and a few others, India, and a few others. Off to you.
Absolutely. All right, let's jump over here and quickly cover finances, guys. Before we do that, let's go ahead and pay the bills. As always, guys, www.energynewsbeat.com, the best place for all your energy and oil and gas news. Hit the links in the description below, timestamps, all the links to the articles. You can also check out our Substack, theenergynewsbeat.substack.com, a great place to stay up to speed on custom analysis and thoughts coming from the minds of me and Stu personally. It's scary, I know, but you can get inside our brain by following our Substack. It's a great way to support the show and a great way to get daily thoughts in your inbox, theenergynewsbeat.substack.com. Thank you for supporting the show, Reese Energy Consulting, guys. Please check them out, reeseenergyconsulting.com. If you need help in the midstream space, look no further than Reese Energy Consulting, guys. I promise you they have the expertise and the knowledge to be able to help you in whatever your endeavors in the midstream space is. Whether you're an oil and gas operating company and need to negotiate with your midstream partners and get better first purchaser contracts, they can save you money there. Whether you're a midstream company who's looking to enter into a new play and you need a red team to come and look at some analysis you've done, whether you need backfill support because you've lost team members and you need some temporary help, Reese Energy Consulting is there to help. Guys, they work from everybody from two guys in a garage all the way up to the largest publicly traded companies in the world. So if you're wondering if they can accommodate you, the answer is yes, reeseenergyconsulting.com. And finally, guys, if you are wondering what to do with your tax burden this year, do not pay the IRS. Consider investing in oil and gas and getting a great tax deduction and taking advantage of dividends that come along with that. Investinoil.energynewsbeat.com is our oil and gas portfolio survey. Will show you if you are a good fit or not. We'll send you a bunch of resources to help educate you on what it looks like to invest in oil and gas. And finally, if you are a good fit and you like what you see, we will go ahead and point you in the right direction. That's investinoil.energynewsbeat.com. Let's go ahead and look at top line indices through S&P 500 up about 1/10 of a percentage point. NASDAQ up about 0.3 of a percentage point. 2 and 10 year yields basically flat, 0.2 and 0.4 for the 2 and 10. Dollar index up about 0.2 of a percentage point. Bitcoin up over $120,000, 120,200. It's unbelievable. Crude oil, not a great day, down 2.15 percentage points, down to 66.98. Brent down basically the same, down to 69.15. Natural gas up about 4.5 percentage points on the day, $4 or $3.46. You know, in terms of price movement today, obviously we've lost about 2.5% on the indice, down below 67. Has a lot to do with the story we just first covered, that Trump has basically threatened new sanctions in the form of 100% tariffs on Russia, but he has given them a deadline of 50 days until they agree to a peace deal. You know, between me, you, and the fence post, because we're all friends, I agree with basically Bob Yeager, who says that the chance of U.S. imposing tariffs are practically zero. And he's speaking a little bit on the fact that China would be included in this if they continue to buy Russian goods. So he's going at Russia by threatening tariffs on both Russia and China. It's not going to happen. inflation would go through the roof. I mean, it's pretty unbelievable. That was really the big news of the day, Stu. I think everybody is sort of waiting around to see what happens later this afternoon with the API crude oil inventory report, which we will cover on tomorrow's show. But the last one I wanted to cover is the oil supply surge not impacting tight oil market. The funny part is, and I think what this shows is that, we saw the recent 511,000 barrel increase from OPEC, which was about 100,000 barrels more than was expected. But that is really not untightened the oil market that we've seen right now. And that's the funny part. We're sitting at $67, and you could argue on a fundamental level, global inventories are still high, but demand is outstripping supply at this point. So we're either dipping into global inventories, which people don't seem to be aware of, or we're discounting the fact that these inventories aren't necessarily going to be touched. Maybe a lot of those inventories are in China, and maybe China is waiting for a potential move that could force them to tap into their inventories. So they're not going to use them in case of that. We all know what that could be. So there's this also interesting that the actual production, and this is really interesting. Okay. So there's this quote in here, Stu, you say actual production has consistently fallen short of these ambitious targets. And these targets are considering the increase that we're saying, this 111,000 barrels per day. In May 2025, OPEC output rose by only 150,000 barrels, which was well below the planned 310. June only saw a 276 barrel increase. So it's pretty interesting that the actual production relative to what the supply and what they're saying, it's disjointed. And that's always what you have to talk about when it comes to the fundamental market. So absolutely interesting, Stu. U.S. is still, holding steady at record levels. We haven't quite seen everything turn over yet, but I think we will in a little point. But Stu, this is a great article you put. I've made the claim that OPEC is increasing production not to harm and take back market shale and harm U.S. shale, but to try to eke out a little bit more money as they try to diversify away from oil and gas, but also keep their members in line. Is that right? Is that how you see it?
Absolutely. I see that in their members, trying to get their members in line. I don't think they're trying to get market share from the U.S. Libya is really the only one that can do market share from the U.S., as there are now, I believe, 8 majors trying to bid and work in Libya, because Libya has actually got light sweet crude that compares to the Permian.
Ooh, yep.
And so when you take a look at any of the OPEC plus members, that's really the only one that can take true market share away from the United States. And when you take a look at Cushing, inventories are at a 11-year low.
Global inventories are up. U.S. inventories are low. It's really interesting.
You got it. So I think Charles Kennedy is the only one paragraph in here I quoted was refiners, especially in the Midwest along the Gulf, are watching closely.
Absolutely. And, to tickle Stu, there's a conspiracy theory somewhere in there that we'll cover on a later show, guys. But with that, we're going to let you get out of here. Get back to work. Start your day. We appreciate you checking us out. EnergyNewsbeat.com. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.